Happy day all. I'm Dr. M. Madhumathy, Assistant Professor, BCom Accounting and Finance Shift 2. Today I'm going to discuss the topic An Introduction to Goods and Service Tax, the GST. To start with, first of all, what is tax and why do we need to pay tax? Tax is a revenue that is generated by the government from the public. Tax is a compulsory fee that the government collects from its public to fund all the government activities. And of all the revenue that is generated by the government, more than 50% of the revenue is generated by way of tax. What does the government do with the tax money that is being collected from the public? The tax money that is being collected from the public is used for two kinds of expenditures, that is recurring expenditures and non-recurring expenditures. So what is the difference between a recurring and a non-recurring expenses? The salary paid to the government employee falls under the category called recurring expenses, and the infrastructural facility the government provides to the general public by way of constructing a good road, hospitals, schools, colleges, bridges, factories, etc. falls under non-recurring expenses. So as already been told, more than 50% of the government revenue is in the form of taxation, and that money is used to pay the government people the form of salary and also for the infrastructural facility of the country. Now a small introduction to history of taxation in India. Even in the ancient literature of Manusmriti, the concept of tax is being discussed. In Maurya dynasty, the high-class people used to pay 1/6 of their income in the form of taxation. And following by that, when the Mughals invaded India, they had a different style of taxing. They taxed all the non-Islamic people. Followed by that, the current formal taxation system that we are using now was introduced in India by Sir James Wilson in the year 1860. Coming to the most interesting topic, what are the different types of taxes? Basically, tax are of two types, direct tax and indirect tax. So what is direct tax? The picture can very beautifully representing the tax that must be paid by the person on whom it is levied, which means you cannot shift the burden of your taxation to someone else. Whereas your indirect taxation is a tax levied on one party but passed on to another person for payment. I will give you a rightful example for direct tax and indirect tax. So an example for direct tax, if Mr. A, who's working for a company, is earning rupees 80,000 per month, so at the end of the year, he has to pay tax for the income earned by him. So that comes under the category called direct tax because the tax is levied on Mr. A and it's Mr. A who's supposed to pay the tax. When coming to indirect tax, you go to a shop and buy a chocolate for rupees 50. On the back of the wrapper, you can find that inclusive of all taxes. That is indirect tax. The tax was initially levied on one person but finally paid by the consumer. So that is the transfer of responsibility of payment from one person to another person. That is your indirect taxation. Now coming to GST. GST is an indirect tax. The goods and service tax was passed in the parliament in the year 2017, 29th March, and it came to implementation effect from 1st July 2017. And the best tagline used for GST is one nation, one tax. Before GST came into existence, we had several taxation. Central had lots of taxations to be levied and state government had lots of taxations to be levied. Now GST has almost replaced most of the central and sales tax. So one nation, one tax means whether you buy a product from Tamil Nadu or from Karnataka or Gujarat, the tax for that product will remain the same. If it's 5% slab rate, the product will have the same 5% slab rate throughout India. So it is named as one nation, one tax, which has facilitated the market of the economy. India has now become a one common market for the economy development. And GST is a single tax on supply of goods as well as for services. Earlier, services had been taxed by the central, but now goods and service tax is covering the supply of goods as well as services. And GST is a dual model, which means the central and the state governments simultaneously levy tax on the people. So it is called as a dual GST model, where the central and the state simultaneously levy the taxation for both goods as well as for services. And the main advantages of GST is that there is no tax on tax. We have a mechanism in GST called as input tax credit, as a result of which the tax on tax is being totally avoided. And these are some of the taxes of central and state that has got replaced and made as one concept of GST. But there are certain taxes which was not replaced. To example, from central taxes, basic custom duty, export duties, clean energy cess and customs cess are still prevailing. From the state, stamp duty, property tax and tax on liquor and petroleum products are still in the hands of the state government. Remaining all the other earlier taxes are clubbed and pooled and now made as one tax called GST, Goods and Service Tax. Now, goods and service tax are classified into 4 categories, that is CGST, Central Goods and Service Tax, SGST, State Goods and Service Tax, UTGST, Union Territory Goods and Service Tax, and IGST, Integrated Goods and Service Tax. So here, Central Goods and Service Tax, as the name implies, is collected and shared to the center. When there is a transaction happening within a state, the CGST will be collected. The same way, when a transaction is happening within the state, SGST, State Goods and Service Tax, will be collected and that amount will be shared to the state. UTGST, Union Territory Goods and Service Tax, is collected by the Union Territory and it is shared to the Union Territory. And the last one, IGST, it's Integrated Goods and Service Tax, and it is collected when there is a transaction happening between 2 states. When there is a supply happening between 2 states, IGST is collected and that money is sent to the central and later on shared between the central and the state. UTGST is applicable to those union territory other than Delhi and Puducherry. Now, a small example of what is interstate transaction and what is intrastate transaction. Now, interstate transaction. In this picture of the very first one, you can see the transaction is happening between Mumbai and Chennai. So, Mumbai is a state of Maharashtra and Chennai belongs to Tamil Nadu. So here there is a transaction between 2 states of Maharashtra and Tamil Nadu. So when there is a transaction between 2 states, we refer that as an interstate transaction. And here the tax collected is IGST, which is Integrated Goods and Service Tax. And that will be going to the central government and later on will be divided between Tamil Nadu and the central based on the agreed proportion. And here the next figure shows an interstate transaction. Here you can just notice Mumbai and Nagpur both belongs to Maharashtra. So a transaction happening within the same state of Maharashtra. So here what happens is that CGST and SGST will be collected and that will be shared and that will be sent to the treasury of central government as well as the treasury of the state government. An example for CGST and SGST. You go to a restaurant and have a happy meal. After when you receive the bill, you can identify the tax will be split into 2 halves. That is CGST 2.5% and SGST 2.5%. So which means for the particular restaurant for food item, the taxation is 5% slab rate. Since it is happening within the same state, the 5% taxation is divided into 2 equal halves as 2.5 and 2.5 and it is distributed as CGST and SGST. The GST is being governed by the GST Council, which is headed by the Union Finance Minister, who is the chairman of the council. Altogether, there are 33 members, including 2. One is Srimati Nirmala Sitharaman and Sri Pankaj Chaudhary, the Union Minister of State Finance. These 2 people belong from the central. The remaining 31 members are from 28 states and the 3 union territories with legislative. And how are they selected? These 28 states and the 3 union territories with legislation, state government will nominate either the Ministry of Finance, Ministry of Taxation or any ministry from their government to represent the GST Council. And what are the functions of GST Council? The GST Council functions are very simple, which means all the things that has to be covered from the GST will definitely be decided only by this council. The tax rate, the exemption, the threshold limit, the date of filing. If you want to bring a particular product for an exemption or nil zero rate, whatever with regard to GST is purely decided only by the GST Council. I hope this is a small introduction to the goods and service tax and it would have served the purpose. Thank you.